We really need to talk about this market. Stocks are approaching record highs, valuations are at all-time highs, and fundamentals are just being ignored. But never mind that stuff. There are some ridiculously stupid things happening right now that only happen during a bubble. What are they and what should you do about it? Never fear, I'll answer all those questions and more for you right now. Welcome back everyone. In this video we will cover the 4 stupid things that only happen during a bubble, and I'll talk about what you should be doing right now. And if you want to make money and are looking to learn and invest alongside a guy with a crooked head and no girlfriend, but a really cool group of kids that I like to hang out with on this channel, and has Instagram, come on, that's got to count for something. Go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and hit the like button as well. The big dogs are down and they know absolutely nothing. Chat room millionaires now know everything. If you don't make 25% in a week, you're a crappy trader. There are some pretty ridiculous narratives floating around out there these days, but I will give you my top 4 that only seem to pop up when there is a bubble. The first stupid thing that only happens when there is a bubble: Warren Buffett gets dumb. Warren Buffett, the greatest investor ever, has clashed with the overall market many times before. He has zigged when others have zagged. Ooh, zigzag, yeah. And he gave us the famous quote, "Be greedy when others are fearful, and fearful when others are greedy." So what has Warren Buffett been doing during this downturn? Well, he's not been buying stocks, I can tell you that much. He's actually been busy raising cash, doing the exact opposite. And he doesn't need the cash because he's sitting on $136 billion. So at his annual shareholders meeting, he basically said, there's nothing to buy. Now, I'm probably paraphrasing that a bit, but there's nothing to buy. Now keep in mind, during the last downturn, Warren didn't rush into anything. He waited until things deteriorated further, and he didn't buy into any of the rallies that happened on the way down. In the end, because he didn't jump on those rallies, he ended up buying at huge discounts and made billions. Now the narrative today is that he has lost his Midas touch, that he is too old, and value investing is dead. All this sounds so familiar to the dot-com bubble, where everyone pronounced him and his investing style completely dead. And the same thing happened during the run-up to the Great Recession. And in both cases, he won in the end and he was right. Long story short on this, he didn't buy any stocks on the dip. He instead raised more cash, and he thinks there's nothing to buy right now. What does that tell you and me? Oh, and in case you were wondering, he is a subscriber and he does like my videos. So just putting it out there, billionaire, like, subscribe, see how they all kind of connect together. The second thing that only pops up when we're in a bubble is trading is easy. I remember this vividly during the tech bubble. I had several friends who were essentially swing trading stocks and making a killing at the time. They were buying every .com stock that hit and then went through the roof, like the infamous pets.com and a whole bunch of other websites like that. And I remember one guy in particular, who will remain nameless, don't want to put anybody's real name out there and embarrass them, received an inheritance of about $200,000. A lot of money, right? He immediately started trading it into high-flying .com stocks. Now, interesting, at the time, we were actually taking a stock trading course at a local college. As we were going through that class, the topic always seemed to turn on how out of whack the market was, and especially with those .com stocks. It made sense to me, so I was cautious. Maybe even naive, I'm not really sure, but back then losing $500 was a huge deal to me, so I was just probably overly cautious. But my buddy fell into the trap of can't lose stocks, and initially it worked. I remember him logging into his account on this new thing called the internet. Yes, the internet did not exist a long time ago, it was new, and seeing his account balance approach $1 million in just a few months. It was awesome, but also sent a few flares up in my mind. He wasn't discovering hidden gems. He wasn't doing any analysis. He was just trading hot.com stocks and riding into the next hot.com stock. And every time he pushed all in. And no matter what he chose, And sometimes he chose just because he thought the name of the stock was funny or cool or something else. He continued to, basically double his money. Does any of this sound familiar to now? In the end, he ended up actually losing it all and ended up under $200,000 before swearing off trading altogether and never trading again. I cannot imagine the feeling of having my account go that high, that fast, and then have it deflate down just as fast. It's got to be a terrible feeling. If it was as easy as everyone out there is preaching right now, then everyone would be billionaires and this channel wouldn't even be here. I wouldn't exist. Well, wait, I would exist, but I would have no need for the channel because I'd be a billionaire. Which maybe I would still do it because it's fun, but whatever. So when I read stuff online or articles that just say it's so easy to trade, or I'm starting to hear it from friends and family that just started investing that it is just so easy to make money, a bubble may be forming. And the third stupid thing that only happens in a bubble, bankrupt companies rally 500% in a week. So how many people saw the craziness with Hertz a little while ago? Typically a company goes bankrupt and either goes away completely and the assets are all sold off, or someone buys the name and there's a handful of other things that tend to happen. What doesn't tend to happen is a 500% increase in the stock in a week. Either way, the company is bankrupt. It failed. Like, epically failed. Like, if you don't like the video, you failed. So typically, investors do not invest in these companies. The vast majority of these stocks go to zero. Yeah, zero. Why would you even risk your money in a company that most likely will go to zero and has proven that they were a failure when you can buy 1,000 other stocks of companies that actually provide value and are great companies? It's like picking up a rotten piece of meat and throwing it on the grill and thinking it will taste like filet mignon. What if you tried that rotten meat and told me it tasted good and I should try it? I would tell you that you have no idea what you are talking about and assume you're either, I don't know, have super weird taste buds or you've just never had a really good steak before. But yet, here we are seeing bankrupt stocks go up 500% in a week and being pitched as a great opportunity in the chat rooms and the blogs out there. When you have anomalies like these popping up in the market, especially ones that even the pros just throw up their hands and just don't know what the heck is going on, you know we may be in a bubble. And the fourth stupid thing that only happens in a bubble, four horsemen. Ooh. Oh, anyways, everyone is an investor. Now this one applies across the investing spectrum, whether it be stocks, real estate, whatever. When everyone is a investor, I know to keep on alert for an overbought market. Now do not get me wrong, slow down before you run to the comments. We were all new investors once, and there is never a better time to learn and start to invest than today. But if you have not done your research, planning, goal setting, strategy, or even just following market fundamentals and understanding the fundamentals in regards to investing, then you probably should take a little bit of time to learn all that before you jump in headlong and become an expert. Furthermore, new investors are far more susceptible to the trap of,
this is a new market, the old rules don't apply, this is the new way to do it. Those old metrics don't matter anymore, that's for old fogies.
I heard this repeatedly before the dot-com crash and the Great Recession as well. In the end, with the dot-com crash, it took the NASDAQ 15 years to recover back to those levels that were the new normal back in 1999. Oh, and yeah, the companies finally had the revenue to bring the valuation in line with those levels 15 years later. The easiest example I can give to illustrate this is real estate. In 2007, I was told I was crazy to sell all my properties and sit on the sidelines. Now, truth be told, I had no idea about subprime mortgages or anything else that was going on. I just knew something was wrong. I flew out to California to meet up with a friend to look at investing in a community in the Valley in California. And the investment opportunity was buying 3 2-track homes in this development out there for $500,000 each and then easily selling them for a $100,000 profit a year later because that's what's been happening out there. And he had the sales data to back it up. At the time, I made a ton more than $36,000 a year, but I had no chance of being able to afford those houses, much less anyone who lived anywhere near that town. And it's not like it was one of those small coastal towns where people might own a vacation home or use it as a second home or, just in a desirable area. It was in the middle of nowhere in the valley. It made no sense at all, but it was a surefire can't miss deal. I walked away, got on a plane, and decided on that ride that I needed to sell whatever else I had and just take a breather and see how this all shook out, because my mind was just officially blown and the math just didn't work. I couldn't put it together in my head. Maybe it's because I went to public school. So I sat on the sidelines for 3 years actually before buying another property in 2010 on the coast. And once again, I was crazy from all my friends and family for buying. So I was crazy for not buying in 2007 and then crazy in 2010 for buying. What do? Investing is a numbers game. The math is the math. FOMO may make you think you are missing it and your math is off, or the old valuation rules are dinosaurs and need to die. But in the end, 2 plus 2 always equals 4. And I got that right. When you apply this to stocks, very few stocks are like Amazon and can trade at what are considered high valuations and make it long term. Right now in the market, most stocks are significantly overvalued. And how many of those do you think are the next Amazon? The answer is not many. Is Hertz the next Amazon? Really? What you should be doing right now. Remember, this is for entertainment purposes only. Do not listen to me. Right now, FOMO is rampant. That is actually another sign that things are extremely overheated. And it's stupid to trade on FOMO. Sorry, that's the truth. And you know what? We have all done it if you've invested for any length of time. It happens, so don't feel bad. Join the FOMO group down in the description. Watch my FOMO video. I'll link it at the end for you so you don't have to find it. But do not give in to FOMO. So here is exactly what you need to do. Do not wait until the stock market bubble pops to create your plan. If you wait till then, you will make a plan based on emotion, and therefore your plan will suck because it's not based on fundamentals. And it doesn't matter. Maybe you're planning on taking some profits and waiting for something better. Maybe you're planning on buy and hold. Maybe you're planning on expanding all your positions further. Just create a plan with real numbers, your buy and sell points, your strategy, and be ready when the time comes. It's okay to question things that sound too good to be true. It's okay to question the wisdom of the coworker who just started investing and is up 500% in their investment, and now they're telling you they're expert investors. Absolutely question it if somebody tells you stocks are easy money. Do your studying, put in the work and the research, and be prepared. If it doesn't dip, that's okay. There'll be lots of opportunities to buy in the future, but at least you were prepared if it did. So be prepared. So the next thing you need to do is click this video right here for help with FOMO. Thanks.